What's up, everybody? Welcome back to Lucid Trading. See that my camera's a little glitchy, but anyways, in about 20 minutes, Jerome Powell's going to be talking, and we're going to hear whether it's going to be a rough time in the coming weeks and months, or whether we're going to have a great time. It's mostly going to depend on, obviously, what's going to happen with tapering, but we just got some news recently that they're considering to raise rates near to 2024, which is pretty awesome. It's being extended by in some part, which is quite nice. So it's going to take a longer while for us to see rates to go up. But yeah, give me one moment over here. I think my camera is still fairly glitchy. We'll fix that in about a second. There we go. That should have solved the problem, I think. But yeah, you can see this right here with the stock market going up 2.2%. At least the Russell's going up 2.2%. Growth stocks are benefiting very much. We're seeing the Dow Jones go up 1.4% right here, right now. And we have the NASDAQ going up 1.2%. The S&P going up 1.2%. Markets like the news, the fact that rates are going to be raised near to 2024 or end of 2024. And if we take a look at the recent news, which we can do, here we go. All right, so this came out from Yahoo Finance. The Fed signals possibility of 6 to 7 rate hikes through 2024 as taper talks advance. So it's just that headline, right? That is so incredibly bullish. There were some people thinking about even end of 2022, beginning of 2023, with such a headline coming out now recently. That is very bullish news here for the markets. And this is why, obviously, the markets are going up so much. But let's just read the first part of it, right? So the Federal Reserve on Wednesday telegraphed it could hike rates 6 to 7 times by the end of 2024, illustrating the central bank's optimism that the COVID-19 recovery will progress well enough for the Fed to tighten its easy money policies in a few years. The policy-setting Federal Open Market Committee still held interest rates at near zero in its updated statement. Near zero, right? But said it had advanced talks on paring back its asset purchase program. So that's what we're going to hear. There's going to be a press conference in 18 minutes. It's going to be 2:30 p.m. Eastern Time. And we're going to cover what's going to happen right then and there. Since the depths of the pandemic, the Fed has been absorbing about $120 billion a month in U.S. Treasuries and agency mortgage-backed securities. But Fed officials have said in recent weeks that by the end of the year, the economy will likely make substantial further progress, needed for the central bank to begin slowing the pace of those purchases. So they're going to be slowing down the pace of the asset purchases that we have had since the pandemic has started. If progress continues broadly as expected, the committee judges that a moderation in the pace of asset purchases may soon be warranted. If progress continues broadly as expected, the committee judges that a moderation in the pace of asset purchases may soon be warranted. So that is the FOMC statement. That is interesting. So, but we already know that the tapering is going to come. It's no surprise. It's not going to come, right? It is going to come around by the end of this year, beginning of next year. We just don't know when. It could be October. It could be November. See, that's why we're waiting here for Jerome Powell to come up and potentially tell us what's going to happen, or maybe not tell us what's going to happen. That could also be interesting. The Fed has insisted that the timing of a taper is not a direct signal on the timing of rates liftoff. So taper is not really connected to what's going to happen with rates. At least that's what they're trying to say here. But before it was like that, right? So 6 months ago, it was like, okay, if they raise rates, then in about 3 quarters, right, in about, let's say, 9 months, they're going to also raise rates. But that's not the case. In the last round of projections released in June, the median member of the FOMC saw no 25 basis point rate hikes through the end of 2022, but 2 rate hikes in 2023, which is most likely not going to happen given the fact that, we got this headline coming out from the Fed signaling that the possibility of 6 to 7 rate hikes are going to happen throughout 2024. So if you were wondering why is the market so bullish right now, why did we just see a spike, it's because of this news. Rates are going to go up later than expected. At least this is pretty much the best case scenario. This is awesome. We still have about 6 minutes left until we're going to listen to Jerome Powell at the press conference. And let me just try to connect to my trading view. Fantastic. You can see right here the VIX is coming down substantially. Look at that. VIX down 14%. The Russell up 2.5%. We've been talking about this for months. Growth stocks are going to rally. Rates are going to be hiked later than expected. Tapering is going to happen later on. And growth is going up. With the CPI heading down, with the 10-year going down, has been sitting pretty much flat for the past couple weeks and for the past couple months. This could mean growth stocks are going to take off. Ignore the people at CNBC. They're all saying cyclical stocks are going to go up. Recovery stocks. No. Growth stocks are going to take off, and they have been taking off for the past couple days and I would say past 2 weeks. I mean, look at this. This is the SoFi up 11%. Robinhood up 7%. Netlist up 10%. These are just examples. Look at that. DIDI spiking back up to $8. This is a Chinese stock. Very nice to see that. So yeah, growth stocks are looking phenomenal. I've shared a list of growth stocks on Patreon. These are the growth stocks that I bought. And so if you want to check that out, you can check out the Patreon. Link is in the description. But yeah, look at that. S&P up 1.4%. We got the Dow Jones going up 1.5%. The NASDAQ up 1.5%. Big tech is rallying, but Facebook is still down. I bought a little bit of Facebook today. I think Facebook is going to do well in the next 6 months. So I don't really care about this downturn that we're seeing here. Make sure you hit that like button. By the way, a bunch of people just joined. Smash that like button right now. Smash it right now for Jerome Powell's speech. It's going to be coming up in about 14 minutes. Make sure you smash that like button. And let me know in the chat, what do you think is going to happen? Are we going to see a taper or not? Is it going to be announced this time, or it's going to be announced next time, or what do you think? I'm really excited, I can tell you that. This is going to be wild. Oh boy. Oh boy, oh boy. 13 minutes left until the press conference, and stocks are going wild. Absolutely wild. Everything is still green. Everything is still going up. I mean, look at this. Alibaba only up 1.4%. After everything that we've seen, it's only able to go up 1.4%. That's kind of disappointing. What can I say? But yeah, then again, Netlist is heading up 10.8%, which is phenomenal. We've been bullish in this stock since it hit $4.3. UiPath is going up. SoFi up 11%. You know, we've been bullish in this stock around the $14 range. Robinhood, same story. It was sitting at $40 and it's now sitting at $45. Virgin Galactic up 2%, looking very awesome. Chinese stocks are green today, so it's not bad, not bad at all. Value stocks are green, recovery is green, everything is green, everything is jumping, and especially the growth stocks. Nano Dimension up 8.3%. Like I said, growth stocks are going to take off, and they're going to keep on taking off. Nano Dimension went up 8.3%, BNGO up 7%, and looking at big tech again, Apple up 2%, Microsoft up 1.5%, Google up 1.2%, Amazon, everything green aside from Facebook in this list. Palantir is jumping 4%. We got C3.ai going up 2%. It's looking like Christmas. Tesla sitting at 750. Like I said, Tesla's most likely going to be filling. I'll show you right now. It's filling this gap that we have right here. Neo sitting at 35.7. I'm still very bullish on Neo. It's above. I think it's up 2.3%. And Li Auto. Why is XPeng dropping? XPeng for some reason dropped. Oh, that's interesting. That is very interesting. Yeah, everything is up. It's amazing. It's good stuff. This is absolutely great. He is too excited. I am excited. Yeah, of course I'm excited. I mean, this is a good sign. This is not a bad sign. When stocks are bouncing like this, that's good. It's very good. I think if we go above 4,430, if we spike through that today, then that could potentially mean that this correction is over. I'm not 100% sure yet. I mean, we still have the press conference coming up in about 10 minutes. Jerome Powell is going to be speaking at the FOMC. And that could give us an indication of what is to come. I mean, if he says, hey, we're going to taper in November, that would be potentially bearish, I would say. And if he says, it depends. But if it's like in December, January, I mean, that's going to be hugely bullish. So, yeah, we'll have to see what happens there. So 10 minutes left until Jerome Powell is going to come out and talk about potential tapering. Once again, hit that like button. Let me know in the live chat which stocks are you most excited about right now. I'll tell you which one I am excited about right now. I am excited about Alibaba still. I mean, regardless of all the downside we've had, I like their business. I like their current fundamentals. And yeah, I'm just still waiting for this one to play out. And it looks like it hasn't quite yet gone up. I mean, even DIDI has gone up 5 percentage points. But I'll give it some time. No problemo. Even C3.ai is going up like 2 or 3%. There you go. Up 2%. Yeah, C3 has just been kind of dormant. But yeah, let me know in the live chat. Let me know in the live chat. And I'm also going to have to link the PayPal. Because I didn't do that. There we go. And I'm going to start a poll. Will Jerome Powell announce the tapering? Yes. No. Next time. Yeah, it's going to be Powell hour. It's exactly. It's going to be really interesting. Yeah, so the Russell has hit resistance right around 2,230. It's not able to push above that. Yeah, we're kind of noticing that here. Some stocks are actually starting to go down slightly. Yeah, look at that SoFi. That is just gorgeous. I've been saying that SoFi was going to go up for like the past 2 weeks. Nobody believed me there. But there you go. Sitting at 16.8. I think it's going to go much, much higher. It's going to go much, much higher. The weekly chart shows that the MACD is about to cross. I think we're going to $20 for SoFi. See what's happening with Tattooed Chef. Tattooed Chef, 2.5% to the upside. That is all right. Let's see, do we see any strange behavior? Yeah, the Facebook downturn down. That is tough. That is tough on Facebook. All right, let's see. We got 7 minutes left until the press conference, and Jerome Powell is going to be speaking. So we'll have to switch the screen right here. See if we can find him. See, we're going to put on, I think maybe watch it through Bloomberg or something. Yeah, for some reason they haven't really given us a link to that whole event. So I'm just going to have to source it somewhere else. Yeah, it says press conference. It's going to be on TV, right? So for most Americans out there, you can just watch it on TV on CBC, probably. But we're just going to cover that through YouTube then. Which is going to be fun. There we go. Facebook is down 4% while everything else is rallying up. That is wild. Down 11% from the top because of the bad news that we had recently about Facebook, of the mental damage it causes on people that use their products, and also what's happening with they didn't want to work with companies from Australia, I believe, and they also said that the new policies that Apple are installing are having a very negative impact on Facebook, on their revenue, their bottom line, and so that's why the stock is going down right now. With it's pretty much leading the pack to the downside. Lucid Group is correcting. I warned about this. I said, hey, it's sitting pretty darn high, generally speaking. Once this stock hits 28, it tends to fall, and it's falling right now. It's sitting at a support, which we said it was going to be around $25. I think it's going to fall further, but I think it might actually hold this line for some time. 5 minutes until the press conference where Jerome Powell is going to be talking, right? It's going to be Jerome Powell's press conference. I'm excited. I hope you guys are excited. And if you are, hit that like button right now. Smash it. Make sure you vote. There's a poll. There's a poll down in the description or in the live chat asking, hey, will Jerome Powell announce the tapering? Right? Is he going to announce the tapering? Yes, no, next. I think I should have probably given different options, like, hey, okay, November or December or whatever. 46% says no. 23% says yes. 25% says next time. So that would be in October. And 5% is saying that he's going to be hiking up the rates, which would be pretty darn wild. 4 more minutes. Four minutes until Jerome Powell. Yeah, so we're still waiting here. Waiting for the old Powell. Papa Powell. Alibaba is still flat. What can I say? DIDI is up, BYD is up, JD up 4% as well. Pinduoduo up 3.5%. We got the VIX pulling back very fast. 10 years down as well. The dollar is going down. Gold is going up. Crypto is going up. Obviously, if they don't taper near term, that's going to be beneficial for precious metals, gold, cryptos, etc. Because it basically means, hey, we're going to keep on printing money. Printing money means inflation. Inflation means, hey, everything is going to rise in value. The FOMC already released the statement, but we're going to watch Jerome Powell, see what he has to say. Hold up. Wait. 2 more minutes left, by the way. Yeah, we're going to read the statements right after that press conference. Finally going up. Is Baba going up? Really? No, it's barely up. Come on, man. That's nothing. Oh. Oops. All right, so one more minute. It's so incredibly difficult to find Jerome Powell. Like, there's no link on the Federal Reserve's calendar, which usually they do have a link. I bet it's somewhere on YouTube. I'll find it in about a second. Think I got it. One moment. If it's not going to be this one, I have no idea which one it's going to be, but... Somebody said there is a link. There is no link. No. Hey, if it's going to be live right now, it's going to be on Bloomberg, most likely, or on CNBC. CNBC could also be the case. Let's see. I don't think CNBC is streaming it. I'm just seeing Bloomberg and Yahoo Finance. And both of these are not showing Jerome Powell yet. Oh, there we go.
Along with our strong guidance on interest rates and on our balance sheet, will ensure that monetary policy will continue to support the economy until the recovery is complete. Progress on vaccinations and unprecedented fiscal policy actions are also providing strong support to the recovery. Indicators of economic activity and employment have continued to strengthen. Real GDP rose at a robust 6.4% pace in the first half of the year, and growth is widely expected to continue at a strong pace in the second half. The sectors most adversely affected by the pandemic have improved in recent months, but the rise in COVID-19 cases has slowed their recovery. Household spending rose at an especially rapid pace over the first half of the year, but flattened out in July and August as spending softened in COVID-sensitive sectors, such as travel and restaurants. Additionally, in some industries, near-term supply constraints are restraining activity. These constraints are particularly acute in the motor vehicle industry, where the worldwide shortage of semiconductors has sharply curtailed production. Partly reflecting the effects of the virus and supply constraints, forecasts from FOMC participants for economic growth this year have been revised somewhat lower since our June summary of economic projections, but participants still foresee rapid growth. As with overall economic activity, conditions in the labor market have continued to improve. Demand for labor is very strong, and job gains averaged 750,000 per month over the past 3 months. In August, however, job gains slowed markedly, with the slowdown concentrated in sectors most sensitive to the pandemic, including leisure and hospitality. The unemployment rate was 5.2% in August, and this figure understates the shortfall in employment, particularly as participation in the labor market has not moved up from the low rates that have prevailed for most of the past year. Factors related to the pandemic, such as caregiving needs and ongoing fears of the virus, appear to be weighing on employment growth. These factors should diminish with progress on containing the virus, leading to more rapid gains in employment. Looking ahead, FOMC participants project the labor market to continue to improve, with the median projection for the unemployment rate standing at 4.8% at the end of this year and 3.5% in 2023 and 24. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been hardest hit. In particular, despite progress, joblessness continues to fall disproportionately on lower-wage workers in the service sector and on African Americans and Hispanics. Inflation is elevated and will likely remain so in coming months before moderating. As the economy continues to reopen and spending rebounds, we are seeing upward pressure on prices, particularly because supply bottlenecks in some sectors have limited how quickly production can respond in the near term. These bottleneck effects have been larger and longer lasting than anticipated, leading to upward revisions to participants' inflation projections for this year. While these supply effects are prominent for now, they will abate, and as they do, inflation is expected to drop back toward our longer-run goal. The median inflation projection from FOMC participants falls from 4.2% this year to 2.2% next year. The process of reopening the economy is unprecedented, as was the shutdown at the onset of the pandemic. As the reopening continues, bottlenecks, hiring difficulties, and other constraints could again prove to be greater and longer lasting than anticipated, posing upside risks to inflation. Our framework for monetary policy emphasizes the importance of having well-anchored inflation expectations, both to foster price stability and to enhance our ability to promote our broad-based and inclusive maximum employment goal. Indicators of longer-term inflation expectations appear broadly consistent with our longer-run inflation goal of 2%. If sustained higher inflation were to become a serious concern, we would certainly respond and use our tools to assure that inflation runs at levels that are consistent with our goal. The path of the economy continues to depend on the course of the virus, and risks to the economic outlook remain. The Delta variant has led to significant increases in COVID-19 cases, resulting in significant hardship and loss, and slowing the economic recovery. Continued progress on vaccinations would help contain the virus and support a return to more normal economic conditions. The Fed's policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. Our asset purchases have been a critical tool. They helped preserve financial stability and market functioning early in the pandemic, and since then have helped foster accommodative financial conditions to support the economy. At our meeting that concluded earlier today, the committee continued to discuss the progress made toward our goals since the committee adopted its asset purchase guidance last December. Since then, the economy has made progress toward these goals. If progress continues broadly as expected, the committee judges that a moderation in the pace of asset purchases may soon be warranted. We also discussed the appropriate pace of tapering asset purchases once economic conditions satisfy the criterion laid out in the committee's guidance. While no decisions were made, participants generally view that, so long as the recovery remains on track, a gradual tapering process that concludes around the middle of next year is likely to be appropriate. Even after our balance sheet stops expanding, our elevated holdings of longer-term securities will continue to support accommodative financial conditions. The timing and pace of the coming reduction in asset purchases will not be intended to carry a direct signal regarding the timing of interest rate liftoff, for which we have articulated a different and substantially more stringent test. We continue to expect that it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. Half of FOMC participants forecast that these favorable economic conditions will be fulfilled by the end of next year. As a result, the median projection for the appropriate level of the federal funds rate lies slightly above the effective lower bound in 2022. Participants generally expect a gradual pace of policy firming that would leave the level of the federal funds rate below estimates of its longer-run level through 2024. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. More important than any forecast is the fact that policy will remain accommodative until we have achieved our maximum employment and price stability goals. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to support the economy for as long as it takes to complete the recovery. Thank you, and I look forward to your questions.
No taper announced.
Thank you. We'll go first to Rachel Siegel.
That's good.
Thank you, Michelle, and thank you, Chair Powell, for taking our questions. When it comes to the taper and eventually to any rate increases, I'm wondering if you can walk us through what substantial further progress looks like, given the latest batch of projections that have
the money printer
PCE inflation coming in a little higher than the June projection, the unemployment rate also being higher than June, as well as the change to GDP lower than June. If you could help us make sense of all those things as you sort through what substantial further progress looks like. that would be great.
Sure. So the test for beginning our taper is that we've achieved substantial further progress toward our goals of inflation and maximum employment. And for inflation, we appear to have achieved more than significant progress.
Yeah, way more.
Substantial further progress. So that part of the test is achieved in my view and in the view of many others. So the question is really on the maximum employment test. So if you look at a good number of indicators, you will see that since last December when we articulated the test and the readings today, in many cases, more than half of the distance, for example, between the unemployment rate in December of 2020 and typical estimates of the natural rate, 50 or 60% of that road has been traveled. So that could be substantial further progress. Many on the committee feel that the substantial further progress test for employment has been met. Others feel that it's close. They want to see a little more progress. There's a range of perspectives. I guess my own view would be that the substantial further progress test for employment is all but met. And so once we've met those two tests, once the committee decides that they've met, and that could come as soon as the next meeting, that's the purpose of that language, is to put notice out that could come as soon as the next meeting. The committee will consider that test, and we'll also look at the broader environment at that time and make a decision whether to taper.
As soon as next meeting. All right, so no taper.
Thank you. We'll go
Nothing
to Howard
announced,
Schneider.
nothing. Great.
Thanks, Chair Powell. Thanks, Michelle. So looking at the steps, we have now basically 4 years of inflation above target, and policy never gets to the long-run rate. I'm wondering if you could address that from two perspectives. One, within the new framework that the Fed adopted last year, and second, from the perspective of the average household that's now being asked to pay higher prices and increasingly higher prices for 4 years running, when for some this year, real wages have actually gone down.
Sure. So as you can see, the inflation forecasts have moved up a bit in the out years. And that's really, I think, a reflection of, and they've moved up significantly for this year. And that's, I think, a reflection of the fact that the bottlenecks and shortages that we're seeing in the economy have really not begun to abate in a meaningful way yet. So those seem to be going to be with us at least for a few more months and perhaps into next year. So that suggests that inflation is going to be higher this year, and a number, I guess, the inflation rates for next year and 2023 were also marked up, but just by a couple of tenths. Those are very modest overshoots. You're looking at 2.2 and 2.1. 2 years and 3 years out. These are very, very. I don't think that households are going to notice a couple of tenths of an overshoot. That just happens to be people's forecasts. We want to foster a strong labor market, and we want to foster inflation averaging 2% over time. And I think we're very much on track to achieve those things. In terms of the framework, I see this as very consistent with the framework. We want inflation expectations to be anchored at around 2%. That's really the ultimate test of whether we're getting this done under the framework. And we do want inflation to run moderately above 2%. I wouldn't put too much on a couple of tenths over 2% in 2023 and 24, 1 tenth in 24. But you're right; those are the numbers.
Thank you. Let's go to Colby Smith.
Still very good.
Chair Powell, thank you, Michelle. Chair Powell, you mentioned ongoing discussions about the tapering timeline, and I'm wondering what the contours of that debate have been. For those that want to move a bit more quickly, is it about maintaining optionality for a 2022 interest rate increase, or is it about financial stability risks or concerns about the efficacy of asset purchases at a time when we have supply constraints? Thank you.
So let me say that there's very broad support on the committee for this plan, both as to the timing and as to the pace of the taper. So this was a unanimous vote today, and I'd say quite broad support for this approach. You're correct that there are some who would prefer to have gone sooner. and they've made their arguments publicly. For some of them, it's a financial stability concern, and for others, it's other concerns. They can make their own arguments. This is an approach that the committee will broadly support, and it will put us, having completed our taper sometime around the middle of next year, which seems appropriate. The asset purchases, as I mentioned, were very, very important in the early stages of the crisis. They were essential in restoring market function in the Treasury and other markets. Then, as the recovery got going, they supported aggregate demand, as they will do. And now we're in a situation where they still have a use, but it's time for us to begin to taper them. Their usefulness is much less as a tool than it was at the very beginning. And of course, this leaves the whole question of rate increases ahead, which is really where the framework is all about, how we deal with rate increases and that sort of thing. So we think this is the appropriate way to go, and again, broad support on the committee.
Thank you. We'll go to Nick Timrose.
Hi, Nick Timrose of the Wall Street Journal. Chair Powell, you have said the test for liftoff is more stringent than the test for tapering. But if the near-term projections today are credible, more of your colleagues seem to think that rate liftoff and not just a taper may be closer at hand. Does the committee have a different opinion than you do about the threshold for liftoff that you've articulated, or do they believe that either inflation or economic growth will necessitate a rate increase sooner than you do?
Well, so again, substantial further progress toward our goals is the test for beginning the taper. And the taper takes some months in everyone's figuring. So you're going to be well away from satisfying the liftoff test when we begin the taper. So in terms of the liftoff test, though, it's what we adopted last September. It's labor market conditions consistent with maximum employment. And while we have interesting signs that in many ways the labor market's very tight, we also have lots of slack in the labor market, and we think that those imbalances will sort themselves out. Inflation at 2% and on track to achieve moderately higher inflation over 2%. That really depends on the path of inflation. If inflation remains higher during the course of 2022, then we may already have met that test by the time we reach liftoff. So I just think if you look at what people are writing down for year-end 2022 numbers, some people are writing down very low unemployment rates, and that's only one indicator, but it suggests a very strong labor market. And I think they're writing down in good faith what they see as meeting the test. There's a range of perspectives about where the economy will be, but by the way, all but one participants have us lifting off during 2023. So it's not really an unusually wide array of views about this.
Thank you.
We'll go to Gina Smialik.
Hey, Chair Powell, thank you for taking our questions. Prior to recent media reports, were you aware of the kind of security buying and selling that Presidents Kaplan and Rosengren were participating in last year? And I wonder if you thought those were appropriate.
So, no, I was not aware of the specifics of what they were doing. So let me just say a couple things about this subject. We understand very well that the trust of the American people is essential for us to effectively carry out our mission. And that's why I directed the Fed to begin a comprehensive review of the ethics rules around permissible financial holdings and activity by Fed officials. So those rules are in many respects the same as those for government agencies, plus a number of things that apply specifically to us because of our business. One of those is sort of three things I would point to in terms of specific restrictions. One is ownership of certain assets is not allowed, and that's bank securities and other things. Secondly, there are times when we're not allowed to trade at all or to buy and sell financial assets, and that's the period immediately before and during an FOMC meeting. And third, there's regular disclosure. So all of these, everyone's ownership and activities are all disclosed on an annual basis. So I would have had to go back and read people's financial disclosures to know what their activities have been. This has been our framework for a long time. And I guess you'd say it served us well. The other thing you would say, that it is now clearly seen as not adequate to the task of really sustaining the public's trust in us. We need to make changes, and we're going to do that as a consequence of this. This will be a thoroughgoing and comprehensive review. We're going to gather all the facts and look at ways to further tighten our rules and standards.
They could still tell somebody about secret information.
Thank you. We'll go to Steve Leisman.
Whatever.
Thank you. Thank you, Mr. Chairman. I only want to follow up on Gene's question. The issue of ownership of these stocks and trades, do you think it's appropriate for Federal Reserve officials to be owning the same assets that the Federal Reserve is buying? Is that one of the modifications that you're looking at? And in that, you said yourself they don't clearly not seen as appropriate. In that, the Fed's code of conduct says Fed officials should avoid even the appearance of conflict. Do those trades, in fact, and holdings violate the Fed's code of conduct? Finally, do you have a timeline as to when you might be done with your review? Thank you, sir.
Don't have a timeline yet. We can start with that. Well, let me address the muni question, since that's in there. I personally owned municipal securities for many years, and in 2019 I froze that, meaning I'm holding all those securities, my wife and I, to maturity, and munis were always thought to be a pretty safe place for a Fed person to invest, because as you know, the lore was that the Fed would never buy municipal securities, so it was not an uncommon thing. And so then comes the COVID crisis, and I reversed that policy, and I did it without hesitating. And the reason was that the financial markets, and including the municipal financial market, were very much on the verge of collapse, and it was time to go, and we did. But we also checked with the Office of Government Ethics, who looked carefely at it and said that I didn't have a conflict. So that's one answer that I wanted to share with you. Secondly, you're right, though. We're going to be looking at all of those things. I don't want to get ahead of the
stocks are going down.
The process here and speculate about particular outcomes. But this, again, comprehensive and deliberate process. We're going to make changes. I want to be able to look back on this years from now and know that we rose to meet this challenge and handled the situation well, and that what we did made a lot of sense and protected the public's interest and the institution that we're all a part of.
I'm sorry, Chair Powell, I just want to follow up. You said I was right when you said right about that the Federal Reserve should not own the same assets they're buying. Is that what
I think that's a reasonable thing. Yeah, and of course, for the most part, we don't. I mean, it was a real coincidence. I happened to pre-own these munis. They were bought many years ago, actually.
Yeah, right.
And so we started buying munis as part of the municipal liquidity facility. So it was really not it just was an unforeseen event, and I couldn't sell them. So what I did was I just held them, checked with the ethics people, and went ahead. So, but as a general principle, yeah, that makes a lot of sense.
Thank you.
Thank you. We'll go to Chris Rugaber.
Thank you. Thank you, Chair Powell. Well, I had a question about jobs and the Fed's schedule, the Fed's policy framework that you laid out here. You and other Fed officials have often talked about expecting a job market pickup in September as more children return to school, freeing up more parents to work, COVID abating. You mentioned in the past the extra unemployment benefits expiring. There's some real-time data suggesting that we may not be seeing much of a return of labor supply. So do you still expect to see that in the next couple of jobs reports? And how would a relatively weak jobs report in September affect your plans? Thank you.
So you're right. We have a really, I'll call it a unique situation where by many measures the labor market is tight, and 11 million job openings, very widespread reports from employers all over the economy saying it's quite difficult to hire people, wages moving up and that kind of, so quite a tight labor market. So our view, I think a widespread view a few months ago, was that several things were coming together in the fall, including kids back to school, which would lighten caregiving duties, including the expiration of extra unemployment benefits, and other things would come together to provide an increase in labor supply. And so we'd get out of this strange world where there are lots of unemployed people and a high unemployment rate, but a labor shortage. And so what happened was Delta happened. And you have this very sharp spike in Delta cases. And I think so that affects, for example, when schools are open 60% of the time, or when they're always at a threat of being closed because of the Delta variant, you might want to wait rather than going ahead and taking a job and starting work only to have to quit it 3 weeks later. You're going to wait until you're confident of that. So some of that may not have happened. Also, people didn't, as you know, hiring and spending in these face-to-face service industries, travel and leisure, it just kind of stopped during those months. So that really the big shortfall in labor in jobs was largely in travel and leisure, and that's clearly because of Delta. So that all happened. And so what we know is that it didn't happen. I think there's still, it may just be that it's going to take more time, but it still seems that inexorably these are people who were largely working back in February of 2020. They'll get back to work when it's time to do that. It just may take longer time. You're right, though. It didn't happen with any force in September, and a lot of that was Delta. In terms of you asked also about the test for November. I think if the economy continues to progress broadly in line with expectations, then I think also the overall situation is appropriate for this, then I think we could easily move ahead at the next meeting, or not, depending on whether we feel like those tests are met.
Well, if I just quickly follow up, I mean, how much of that will depend on what kind of jobs report we get for September? And I mean, is it, are you in a data-dependent phase here where you need to see certain numbers going ahead, or are we at a point where you've accumulated enough progress that?
So it's accumulated progress. So for me, it wouldn't take a knockout, great, super strong employment report. It would take a reasonably good employment report for me to feel like that test is met. And others on the committee, many on the committee feel that the test is already met. Others want to see more progress, and we'll work it out as we go. But I would say that in my own thinking, the test is all but met. So I don't personally need to see a very strong employment report, but I'd like to see a decent employment report. I mean, it's not to be confused with the test for liftoff, which is so much higher.
Great, thank you.
Okay, thank you. We'll go to Victoria Guida.
Hi, Chair Powell. So I wanted to ask about the Vice Chair of Supervision position, and I was wondering if you could speak about how you view that role and the extent to which you defer to that person on regulatory policy. And then just sort of a related question, as you know, Randy Quarles' vice chairmanship ends next month, and I was wondering if he's going to retain the supervisory portfolio until he's replaced in that role.
Sure. So Dodd-Frank created this position, Vice Chair for Supervision, and there's actually a specific assignment in the Dodd-Frank language, as I'm sure you know. And effectively what it means is that the Vice Chair for Supervision is charged with setting the regulatory agenda. And, it's a specific grant of authority. And in the 10 years almost that I've been at the Fed, that person has really done that. Dan Tarullo certainly did it, and Vice Chair Quarles did it as well. And I would, I think I respect that authority. I respect that. That's the person who will set the regulatory agenda going forward. And I would accept that. And furthermore, it's fully appropriate to look at, for a new person to come in and look at the current state of regulation and supervision and suggest appropriate changes, and I welcome that. In terms of Vice Chair Quarles' term, we're not currently in that situation, and I actually don't have any updates for you on that today. We'll keep you posted on that.
Thank you. We'll go to Steve Matthews at Bloomberg.
Thank you. Chair Powell, I wanted to ask about the inclusive monetary policy framework. In particular, Bloomberg surveyed economists, and we found that they predict liftoff will happen when the U.S. unemployment rate is 3.8%, but the Black unemployment rate is 6.1%. And I'm wondering if a 6.1% unemployment rate for African Americans is consistent with full employment, or whether it would need to be lower as part of your inclusive growth strategy.
Right. So the point of the broad and inclusive goal was not to target a particular unemployment rate for any particular group. Really, we look at a broad range of a very broad range of metrics when we think about what maximum employment is. And one of the things we look at is unemployment rates and participation rates and wages for different demographic and age groups and that kind of thing. So we will do all of that. So I think if you look back, what were we really thinking? So we all saw the benefits of a strong labor market. If you look at the last 2 or 3 years of before the pandemic hit, you saw, after a lot of long progress, you saw a really strong labor market, and you saw wages at the low end moving up faster than everywhere else. Something that's great to see. We also saw the lowest unemployment rates for minorities of various, for African Americans, for example, and also participation rates. I mean, we saw a really, really healthy set of dynamics. And by the way, there was no reason why it couldn't continue. There were no imbalances in the economy, and then along came the pandemic. There was nothing in the economy that looked like a buildup of imbalances that could cause a recession. So I was very much thinking that the country would really benefit from a few more years of this. It would have been great. And so we're all quite eager to get back to that. We also said we wouldn't raise rates just in response to very low unemployment in the absence of inflation. So that was another aspect of it, because we saw that really benefited labor market participants in a broad and inclusive way. That's, of course, not the current situation. We have significant slack in the economy and inflation well above target, not moderately above target. So that's really how we think about it. It isn't really just targeting the headline numbers, but it's about taking all of those things into account in your thinking about what constitutes maximum employment.
I guess just to follow up, should there be a significant gap between Black unemployment and overall unemployment for structural reasons that are outside of the control of the Fed that other people should be doing something about, or should the gap be narrowed, if not down to zero?
Well, first of all, ideally there wouldn't be any gap, of course. We would all love to see no such gap. This is a persistent gap, and it's very hard to explain based on typical metrics. It's quite troubling, but it really is. We have famously broad and blunt tools. I think eliminating inequality and racial discrimination, racial disparities, and that kind of thing is really something that fiscal policy and other policies, frankly, education policies and that kind of thing, are better at focusing on. I think we've identified the part that we can do, and we'll do that part. But I've always been clear that it's going to take policies broadly across society to work on these problems.
Thanks.
Thank you. Let's go to Michael McKee.
A plan for dealing with a debt default that included prioritization, that included changes in bank regulations, and possibly selling defaulted or non-defaulted treasuries and buying those who are that are. Are any of all of those still on the table? Do you think any of those would work? And what would happen to the economy, in your view, should the debt ceiling not be raised?
So I missed the first few words, but I think I got your question. So it's just very important that the debt ceiling be raised in a timely fashion so that the United States can pay its bills when and as they come due. That's a critically important thing. The failure to do that is something that could result in severe reactions, severe damage to the economy and to the financial markets, and it's just not something that we could contemplate, that we should contemplate. I'm not going to comment on particular tactics or things like that. I'm just going to say that I think we can all agree that the United States shouldn't default on any of its obligations, should pay them when and as due, and that no one should assume that the Fed or anyone else can protect the markets or the economy in the event of a failure, fully protect in the event of a failure, to make sure that we do pay those. That's when they're due.
Good. If I could follow up, have you discussed options with members of Congress?
I don't generally ever talk about the conversations I have with elected officials or other appointed officials. But look, you can see that this is a major focus among those who have responsibility for it, and including elected people.
Thank you. Let's go to Hannah Lang.
Hi, thanks so much. Senator Warren sent you a letter last week urging the Fed to break up Wells Fargo, citing what she called ungovernable behavior from the bank. I was just curious, under what circumstances would the Fed actually consider revoking a financial holding company's license, and if the indiscretions at Wells Fargo, in your opinion, warrant such an action?
Right, so we're, of course, very closely monitoring Wells Fargo's efforts to fix its widespread and pervasive problems. They represent a serious matter to us, and the firm is required to remediate them. And we will take appropriate supervisory action if the firm fails to meet our expectation. We continue to hold the firm accountable for its deficiencies with an unprecedented asset cap that will stay in place until the firm has comprehensively fixed its problems. We're not going to remove that asset cap until that's done. So bottom line is we'll take strong supervisory action if a firm is engaging in unsafe and unsound practices or violating laws, but I can't speak to our confidential supervisory assessments of any individual bank.
Thank you. Now we'll go to Michael Derby.
Thank you for taking my question. You noted earlier in the press conference that you weren't aware of the trading activity of the Boston and Dallas Fed Bank presidents. As you know, all 12 regional Fed Bank presidents just went through the renomination process earlier this year, and Governor Brainerd described it as a rigorous process at the time. So I want to know, did anybody at the board level know about the stock trading activity? And going forward, do you still have confidence in the Dallas and Boston Fed Bank presidents to do their job?
So these, I don't need to tell you, people file these reports annually, and I think they were just quite recently filed for 2020. So I don't have any reason to think people at the board would have known about particular trading that's going on. They will see that. There are people at the Fed who see that. See the trading reports when they're annually filed. In terms of having confidence in that sort of thing, I think no one is happy. No one on the FOMC is happy to be in this situation, to be having these questions raised. It's something we take very, very seriously. This is an important moment for the Fed, and I'm determined that we will rise to the moment and handle it in ways that will stand up over time. I'm very reluctant to get ahead of the process and speculate, though, about different things. And when we have things to announce, we'll go ahead and do that. But that's really what I have for today.
So one small follow-up. I mean, I know that you didn't have the 2020 forms in hand, but you would have had past year forms in hand. And at least in the case of like the Dallas disclosure forms, similar trading activity was shown in years past. So that in theory could have been something that came up in the renomination process.
So that's a good question. So, the 5-year review that we do under this unusual provision of law where all of the Reserve Bank presidents are reviewed for reappointment at the same time every 5 years, that is really a broad review about their leadership of the institution, their performance on the FOMC, all of those things. And if there were a concern, a public concern or a private concern about something that someone had done, we wouldn't wait for the 5-year. We wouldn't wait that day if there were concerns. you're right though. These, as I mentioned, we have had a framework for a long time, and it's similar to what other government agencies have, only it's a little stricter, and it is that you can trade financial instruments, but not specific ones like bank debt. You can't trade during the FOMC period and during the meeting, the blackout period, and then during the meeting. And then you disclose all this, and we have disclosed it for years. So all of these things have been going, to the extent they've been going on, they've been a matter of public record. And, but nonetheless, so that, it was seeming to work just okay. And now you look at it and you see this and you think, we need to do better, and we will. But you're right, but it has not been part of the process, and appropriately, I don't think it should have been. I mean, I wouldn't blame the people who conduct that review. I really think if someone had raised concerns, or if we'd had concerns, then it would have been, but it wouldn't have been part of that process. It would have been raised instantly rather than once every 5 years.
Thank you.
Thank you. Let's go to Jean Young.
Thank you, Michelle. Chair Powell, I wanted to ask about how the Fed would balance the two parts of its dual mandate. If inflation stays elevated, but we still have a labor shortage and participation remains lower than ideal, would you hold off on raising rates, or how would you think about that? Thank you.
Well, let me say one thing. You're looking for conditions consistent with maximum employment to lift off, and those conditions can change over time. So you're not necessarily bound by a particular level of the unemployment rate or the participation rate or anything else like that, which can change over time. But more to your point, really, we actually have a paragraph in our framework, and something like this has been there for a long time. I think it's paragraph 6. And you're talking about a situation in which the two goals are not complementary; they're somehow in tension. And if we judge that is the case, what it says is we take into account the employment shortfalls and inflation deviations and the potentially different time horizons over which employment and inflation are projected to return to levels judged consistent with mandate. So we used to call that the balanced approach paragraph because it had those words. So it's a very difficult situation for any central bank to be, to be in a situation where the two goals are in tension. And that paragraph tries to address it by saying we would sort of weigh the equities between the two. How long will it take, and how big are the gaps, and that kind of thing. We don't really think we're in that. We're sort of in that situation, I'd say, in a short-term way. But we think we do expect that that this is sort of because of the COVID shock and the reopening and all that, you're seeing this temporarily.
Great. Thank you. We'll go to Edward Lawrence.
Thank you, Michelle. Thank you, Mr. Chairman, for taking the question. So on corporate debt, what happened with Evergrande that we've been watching, is that a preview of what could happen with the amount of corporate debt that's out there? In the past, you've said you're watching the level of corporate debt. So what's your level of concern right now? And would you consider the Evergrande Group issue a sort of a warning signal?
About the United States? No. Corporate defaults are very low in the United States right now. Corporate leverage built up over the course of the long expansion that ended with the pandemic. We were very concerned in the last year or so. We were concerned in the last year or so, and then I'd say very concerned at the beginning of the pandemic that if you've got a highly leveraged company and your revenue stops for an uncertain period, as things happened at the beginning of the crisis, we were very concerned that there would be a wave of defaults. Didn't happen, potentially, to a significant extent because of the CARES Act and the response that we undertook and all that. It was a much stronger response than we've ever had. And I think for whatever reason now you have very, very low default rates now among corporate debt. The Evergrande situation, it seems very particular to China, which has very high debt for an emerging market economy, really the highest that any emerging market economy has had, and the government has been working to get that under control. This is part of that effort. The government put new strictures in place for highly leveraged companies, and Evergrande is dealing with those strictures, and it's something they're managing. In terms of the implications for us, there's not a lot of direct United States exposure. The big Chinese banks are not tremendously exposed, but that you would worry that it would affect global financial conditions through confidence channels and that kind of thing. But I wouldn't draw a parallel to the United States corporate sector.
Thank you. We'll go to Brian Chung.
Hi, Chairman Powell. Just wondering if you could give us an update on whether or not you've had conversations with the White House about a possible reappointment, and then whether or not you would like to be reappointed as this chatter kind of builds up. Thanks.
I think the phrase goes, I have nothing for you on that today. Sorry. I'm focused on doing my job, every day for the American people, and I don't have any comment on that, Brian.
Sorry about that. Let's go to Greg Robb.
Thanks for taking my question, Chair Powell. I was wondering if in your discussion about the tapering, that you said that officials think it's appropriate to end around the middle of the year. If there was any discussion about what happens to the balance sheet, then I've heard some Fed officials say that they would shrink the balance sheet. Was that discussed, and what's your stance on shrinking the balance sheet? Thanks.
So my thinking on this has been, let's get through the taper decision, and then let's turn to those issues. There are a number of related issues. You mentioned one, Greg, but and which you need to start to think about, and we'll do that. But we want to get through this taper decision and then turn to those issues, rather than start thinking about them now and having the minutes discuss them and get people thinking that we are, focused on those issues, because we're really not. And we do have the experience of what we did last time. We've watched other countries and what they've done. So I think we'll be able to get to sensible decisions fairly expeditiously when it's time, but it's just not time yet in my thinking.
Thank you.
Thank you. Let's go to Scott Horsley.
Thank you, Mr. Chairman. You talked a little bit about inflation expectations, and there does seem to be something of a divide between market expectations and the views of professional economists, which are pretty much in line with the FOMC members, and lay people's expectations, at least as reflected in the recent New York Fed survey. How much weight do you put on lay people's expectations, and what do you think accounts for that divide?
So within, let's just take the household surveys generally. The New York Fed survey, let me talk about that specifically, and this is from the New York Fed. It's only an 8-year-old survey, and it does seem as though they're looking 3 years out, and it seems like there's a high correlation between 3 year and 1 year. For the most part, surveys are showing that households expect higher inflation in the near term, but not in the longer term. And that's also what expectations are showing. So there are many, many different inflation measures, of course, and that's why we have this thing called the CIE, which is it's an index of it's market-based measures, it's professional forecasters, and it's household surveys. And you just put them all. It's not, it doesn't have a lot of grand theory about it. You put them all in, and you measure the change. So you should be, and also you measure things like the dispersion and that sort of thing. So you can look at all of that, and it tells a story of inflation expectations moving up. Many of the different measures will also show inflation expectations moving back up to where they were in, say, 2013, which was before the drop in inflation expectations broadly happened in 14 and 15, around then. So. That's not a troubling thing, but inflation expectations are terribly important. We spend a lot of time watching them, and if we did see them moving up in a troubling way and running persistently above levels that are really consistent with our mandate, then we would certainly react to that. But we don't really see that now. We see more of a moderate increase that is in the first part of which is welcome, and because inflation expectations had drifted down, and it was good to see them get back up a bit, but again, we watch carefully.
Thank you. Let's go to Heather Scott.
Hi, sorry. You caught me off guard. Thank you, Chair Powell, for taking my question. I really appreciate it. Again, on the taper timing, you say it's going to last till the middle of next year, but with your concerns about the potential for upside risks to inflation, would you
Bij AMAC vinden we samen de Mac die bij...
Yeah, sorry, I don't know. Livestream just randomly disconnected. Probably from my side. It's going to take about a second to reload that. These ads are becoming very long. Down. Oh boy. Here we go.
We weren't on a preset course. I think this will be a shorter period. The economy is much farther along than it was when we tapered in 2013. So it makes sense to allow the runoff to happen. It's a very gradual taper. It will be when we agree on it. And but we certainly have the freedom to either speed it up or slow it down if that becomes appropriate.
But you wouldn't expect rate liftoff to happen until you're finished with that process?
It wouldn't. No, because when you're as long as you're buying assets, you're adding accommodation, and it wouldn't make any sense to then lift off. I mean, what you would do is you'd speed up the taper, I think, if that were the situation you're in. We don't expect to be in that situation, but I do think it would be wiser at that point to go ahead and speed up the taper, just because the two are then working in the same direction.
Great, thank you.
Thank you.
Okay, for the last question, we'll go to Jeff Cox.
One more question.
Thank you, Mr. Chairman, for taking the question. I just wanted to check in with you to see if you have an update at all on the efforts from the Fed to develop a central bank digital currency. I believe that the report was supposed to come this summer, and indications that it's going to come this month. But the drumbeat seems to be kind of getting louder to see where the Fed's heading on this, and just wondering if you can provide some update there.
Sure, I'd be glad to. So we think it's really important that the central bank maintain a stable currency and payment system for the public's benefit. That's one of our jobs. We also live in a time of transformational innovation around digital payments, and we need to make sure that the Fed is able to continue to deliver to the public a stable and trustworthy currency and payment system. So there's extensive private innovation, a lot of which is taking place outside the regulatory perimeter, and innovation is fantastic. Our economy runs on innovation. But where the public's money is concerned, we need to make sure that appropriate regulatory protections are in place. And today, they really are not in some cases. So with that in mind, and with the creation of myriad private currencies and currency-like products, we're working proactively to evaluate whether to issue a CBDC, and if so, in what form. We have two broad work streams, one of which is really technology, both at the board and in the Federal Reserve Bank of Boston's work with MIT. The other of which is to identify, scope out, deal with, analyze the various public policy issues. As you mentioned, we do intend to publish a discussion paper soon that will be the basis for a period of public engagement with many different groups, including elected officials, around these issues. We think it's our obligation to do the work both on technology and public policy to form a basis for making an informed decision. The ultimate test will apply when assessing a central bank digital currency and other digital innovations is, are there clear and tangible benefits that outweigh any costs and risks? We're also, as you know, investing heavily right now in building a new settlement system for instant payments in the U.S. It'll be the first such major expansion of our core payment system since the 1970s. We found the case for this quite compelling. For consumers, businesses, and just ensuring that all financial institutions have access to the payment system. So bottom line, we haven't made a decision about the CBDC, but we will be issuing a discussion paper soon in order to form the basis of this public interaction that we'll have. Thank you very much.
If I could have a quick, can I get a quick follow on that?
The chairman of the Federal Reserve, as many look for a quick follow-on to what I thought, folks, was the most interesting press conference we've had in ages. Here's our plan. We're going to look at the equity markets with Romain Bostic. Michael McKee, of course, with perspective.
All right, that was it. They just cut him out. Okay, but that was very informative. I think very, very informing, actually. Let's get back to trading view. Let's get back to the charts. We'll take about a second. There we go. Right, so we got some very, very good news. We didn't get a taper announcement. That is incredibly bullish. I think the correction is over. I don't think we're gonna go down much further than what we have seen. You know, I don't think the S&P is gonna go below the recent drop to the downside that we have seen, below 4,300. And you know, you can see indices are heading up. Right, look at that. Russell up 2.2% still. Nasdaq up 1.4%. S&P up almost 1.3%. And it looks like a lot of stocks are doing incredibly well today. And no surprise, the taper was not announced. No taper, no nothing. We're waiting for the labor conditions to meet the expectations. And that basically just means we need to see some strong job reports before they actually announce any sort of tapering. And it could be as soon as next time, the next meeting, which is going to be in November and October. I meant October. I think it's the end of October. And until then, right? So if we see any sorts of signs like the job growth is skyrocketing, then that could mean we get a taper. Maybe in November, December. But yeah, no taper announced. This is good news for the markets. This means that the money printer is going to keep going, so to speak. This is causing the VIX to go down substantially. Indices are heading up quite a bit. Precious metals are heading down as fear is subsiding. Bond yields are heading down here as well, because obviously the Fed is going to keep on buying bonds, or at the same rate at least. And cryptos are going up again. This is beneficial for cryptos because if the money printer keeps going, that is going to mean that the currency is going to get devalued further, at least at a faster pace than what we have seen. So, yeah, that was interesting. That was very interesting. I tried to remain quiet when Jerome Powell is speaking. I don't want to speak. I don't want to interrupt because I think it's better to listen. And then right after, we just summarize what he said. So far, I don't have any indications of him saying that we're going to see a taper soon, so long as job growth is going to be terrible. I mean, look what happened last month. In August, we had only 200,000 jobs added, and people were expecting 700,000. Hey, so if that if the job growth is going to remain stagnant, then I don't think we're going to see a taper even this year. It could be next year, maybe January or February. And so that is very, very good news, meaning that we're probably going to see growth stocks go up very soon because there's no yield. Everything is sitting at all-time highs, and growth stocks are sitting 50% down from their all-time highs in many cases. And yeah, we'll have to see. And regarding the rates going up, he stressed again that rates and tapering, those two things, trying to decouple them, right? It's if they start tapering, doesn't mean they're going to raise rates soon. Expect to see, we're going to see rates go up probably somewhere between, I would say, 2023 and just beyond. So no rates going up in 2022. And he also said that by mid-2022, they would be done with the taper. And yeah, so it would take about 6 to about 8 months for them to complete the tapering, for them to actually stop buying any more assets on a monthly basis, if they do announce any sorts of tapering. That was his expectation, at least from what he said, if they start tapering soon, or if they announce the tapering next month or the month after that. That was an interesting thing as well to hear. Didn't know that was actually his expectation, to be done by the middle of 2022. But he did indicate that would be the case if he were to taper. So, all right. So what's happening in the markets? AI going up 2%. Palantir up 3.2%. That's looking good. Tesla's heading up 751.9. The market is heading up. Yeah. No wonder. I mean, no wonder. No tapering coming. Money printer goes burr. money printer goes burr, it will keep going, and it's going to benefit these equities. And look at Baba. It's doing nothing. I mean, what can I say? Alibaba. Oh my god. On a day like this, it's just not doing anything. Oh my god. At least DIDI's heading up 5.1%. BYD is up 2.4%. Baidu's heading up. Tencent up. Virgin Galactic is up 1.5%. Robinhood is up 7.7%. I mean, look at that. I was very bullish on Robinhood. Why does this thing... It's messed up. Robinhood is sitting at 45.5 on the news that they're going to have a crypto wallet released very soon. And that could benefit Robinhood greatly. Uber sitting at 45. Sold off at 46.7. Chilling at around $45 per share. UiPath going down once more, down 0.7%. SoFi up 11%. I mean, SoFi is, in my opinion, ready to... I think it's going to keep going up at this point. I mean, if you think about it. We're just getting started. One moment. Let me just fix this real quick. Yeah, I sold my Alibaba stock at a loss, a couple dollars loss per share. I sold all of it. I sold all my stock, all of it, at a loss. And I bought options. Let's go. Yeah, I bought CFDs, so we don't really have the calls and the puts that you guys have in the US, in Europe, but we do have CFDs. So I bought some CFDs, leveraged up. I got some with 10 times leverage, some with 5 times leverage, and some with 3 times leverage. But all of them leveraged up. We'll see what happens. I think this is a support level for Alibaba. If I'm wrong, then I got a stop loss. So I do have a stop loss because it's a very risky position to be in. Basically, my stop loss is if it's down 20%, not Alibaba, but my own options, then I'll sell at a loss, obviously. But I'm fairly convinced that we're sitting at a very strong level. With the Evergrande situation improving now, and with the Fed saying, hey, the money printer is going to keep on printing, and Alibaba, well, it's been going down for a long time now. It can keep going down, of course, but we're sitting at a significant level. And that support level has still not been breached. And on the weekly chart, we're oversold. On the daily chart, we're pretty close to being oversold. So, yeah, leveraged up in Alibaba at 150. And I think there are some exciting times coming. Whether it's going to be to the downside or to the upside. But yeah, we're just getting started, right? We're just getting started. I don't like to take this much leverage at times. But I just completely disagree with the sentiment right now. I'm fairly convinced Baba could be moving up from here. Although technicals right now disagree with me. Because you see the RSI spike, yet the price is not doing jack. It's just painful, very painful, but we'll see. We'll have to see, right? It's a bit of a gamble, bit of a that's pretty much it. It's a bit of a gamble. It's a risky trade. It's a risky play. Don't do what I do. I'm not a financial advisor. This is not financial advice. Hey, it could very well drop to 130, and my stop loss will be triggered, and I have a 20%. Downturn in that part of my portfolio. How low can it fall? It can get back to 130. It can. But will it? I don't know. I don't think so. Yeah, I bought options on Baba for the people that don't know. Okay, let's see. Indices are pulling back. Oh boy. Dow Jones pulling back. Nasdaq pulling back. S&P pulling back. C3.ai up 2.2%. Nothing significant though. Palantir still sitting up 3%. AMC sitting at 40. What do you think about ChargePoint? Did you sell out of Netlist? No, I still have my Netlist. I have everything that I listed. Everything that I have right here, I pretty much own. Depends on the stock, right? I have a boatload of Netlist. I have a boatload of UiPath. But I don't have that much of DMYI. I don't have that much of GGPI. Let's check ChargePoint. What did we say for ChargePoint? We said ChargePoint go down. It spiked and it went down. Well, didn't go down as much as I thought. With the Fed saying that they're not going to taper, I think ChargePoint will benefit. They shall benefit a lot. Why are the indices pulling? Because the Fed chairman, Jerome Powell, he's already spoken, right? So he already said what he wanted to say. So it's a bit of like, you could view it as a buy the rumor, sell the news, right? People bought right before, and now they're selling. I'm just so disappointed in Alibaba right now. I mean, it's only up 1%. That is very bad. So it hitting 152, we almost went overbought, but it's not even up that much. Same story right here. 153. I mean, that's not very high. It has been downtrending ever since the spike that we had at open. Alibaba won't recover until the Evergrande negativity is gone. But then it's too late. When the Evergrande situation is resolved, it's too late for you to get into Baba. By then, it's already gone up 10-20%. Let's see what's happening with DIDI, right? Look at that. That is bullish. It is heading up like crazy. It's good stuff. DIDI is now sitting at $8. Which, you know, DIDI's been suffering so much lately. Which all the, you know, the government has been cracking down on this company like there's no tomorrow. And if you take a look at what's happening on the technical side of things, I mean, take a look at this. The MACD's crossing on the 4 hours. That's good news. So this could mean that the trend reversal is coming up once more. We already filled this gap to the downside. We hit a support zone. Now we're heading up, sitting at $8. Up 5.4%, which is not bad. You can see right here the daily chart might actually cross on the MACD too. Ultimately, I think we're going to be getting back to that $9 mark for DIDI. So it's another roughly 10% from here, 10 to 15%. See if we can highlight the bottoms. Not really. This is not super accurate, by the way. But it does seem like we're heading straight back to $9 if we bounce off further. What's happening? Wait, what? Robinhood is up 9%? Oh, wow. Look at that. Robinhood is heading up 9.4%. Nice. It's sitting at 46.25. That is lovely. Yeah, I would say we're probably going to see this resistance be hit, which is around 47. And then once we hit that resistance, we go back down to 45-ish. You know, it's getting overbought on the 4 hours. And the daily chart, still fairly reasonable. Why are you so disappointed? Because it's barely budging. We got all the stocks going up right now. Even the Chinese stocks are going up. And Baba is barely going up. It's just people are selling like freaking crazy. That's what's happening with Baba. People keep selling. Every spike, they're selling off. Do you see this? This is not a sign of confidence. Although it's trending up short term, it doesn't mean anything. Look at that. Even DIDI's managed to go up. Like DIDI is up 5.4%. Baidu up 2.3%. BYD is up 2.5%. Heck, their competitors are going up way more. JD is up 3.9%. Yet JD's barely down from its all-time high in comparison to like an Alibaba, right? So JD's down like what 30% from that high, like 28%. So yeah, it's quite disappointing. You would expect a much higher move in Alibaba, especially given the fact that it's sitting at that support zone, right? It's like, and it's oversold on the technicals. But yeah, it's just that negative cloud that's over Alibaba. It's like everybody is afraid of it. Stop talking about Alibaba. We don't care about Alibaba. I think a lot of people care about Alibaba. I think a lot of people are focused on this stock. From what I've seen, you know, all the YouTubers are talking about it. And we were talking about this way before that. One moment. But yeah, I mean, what can I say? People are going to buy what they're going to buy. Hey, if they want to put all their money in SoFi, so be it. SoFi is about to go up massively. I mean, look at that weekly chart. We're about to see MACD cross there, and it's going to go back up to 20. Here we go. Yeah, SoFi is more. It has more room to be running, more room than what we've seen right now. Netlist is sitting at 5.67. Virgin Galactic is up 1.5%. Value stocks are slightly green. Make a poll on who cares about Baba. Oh, yeah, sure. Do you care about Baba? Let's just ask that. Alrighty, value stocks are barely green. It's mostly the big banks that are moving. The recovery stocks are moving. The growth stocks that are moving. Big tech is moving right now. Tesla's sitting at 751.8. Neo up 2.4%. I'm telling you, Neo's still very cheap. I am telling you. Lucid Group has been pummeling downwards. Damn. This might be an opportunity to buy like a small amount of Lucid Group. I have the tendency to call what is it? To call Lucid Group CCIV because it used to be CCIV. AI up 2.4%, Palantir up 3.1%, AMC up 3.4%. That's nice. Not bad. Indices are still green. VIX is still heading lower. The 10-year is going lower as well. Cryptos are spiking. And Baba is barely up. Yeah, so 48% of people say they care about Baba, and 52% says no. That is a good amount of people that care about Baba. 48%. I expected it to be like 20 or 30%. Somebody said you look tired. Yes, I actually moved some stuff downstairs today, and it was very heavy. It took me about an hour to do that, but that's why I'm a little tired right now. Anyway, we're going to turn on the membership only mode. So if you're a member, then oh, here we go. Members only right now. Only for the members. I think we had a new member today. Can't find that person's name because it's been like a while ago. Oh boy. All right, if you're a member, make sure you ask me any questions, right? Oh wow, we did not manage to fill the gap. That is messed up. US 100. Wait, what? Delete everything. So far we have higher lows and higher highs. That's good, but there's not the same amount of strength that we have seen in the past. At least I don't think this is similar. And the S&P is struggling to get above 4,400. Actually, it's about to go down again. Igorino1 just donated €2. Thank you so much. Igorino says, could you check Nano Dimension for this week? I think Nano Dimension has gone up quite a bit for this week already, from the bottom. But yeah, Nano Dimension. Let's just take a look at this. We hit the resistance zone. I think we could possibly either consolidate or just pull back slightly before we see any sorts of move higher. But the daily MACD is looking fairly good. RSI heading up. Volumes are relatively okay, right? Although we have seen much higher volumes in the past. Obviously, I do like the fundamentals of this company. I've already covered this in the past. Wouldn't be surprised if we get back to that 5.9 zone, and then we head higher again throughout the coming week or I'll say 2 weeks. It's going to take us 2 weeks to get above. Takes a long time for the stocks to rally. At least recently it's been taking a long time. But remember, we had a massive push in December and January, and that was the reason why it moved up so fast in the past. But right now we don't really have that. It's kind of a slow mover. Yeah, let's just say we get to $7 by like first week of October. I think that seems to be fair at this point. See what's happening here in the chat. John Smith says, hi. Please check BLI. We'll check it in a sec. Skills. Please check BLI. Smile Direct. MU. Red or green tomorrow? Red or green tomorrow? With the current momentum that I'm seeing, I think it's going to be red. I'm not seeing a lot of strength. I'm not necessarily thinking it's going to be like a massive downturn, but it looks like we might see some red tomorrow with the current momentum that we have. It's just we're failing to go up beyond certain levels, and that's notable. Next, I move to an apartment where there is an elevator. Yeah, if only I had that privilege, right? But the housing market is kind of messed up right now, so. Please check BLI. Path still down for the day. Was much lower, though. Is Path going to rally up from here? Yes, I do think so, yeah. Anything related to growth that has a reasonable balance sheet and has a bright future ahead of it, I think is going to do fine. And that's what we're seeing here. Netlist up, you know, Robinhood up, SoFi up. Many of these names are doing pretty good. Pretty good. We have about 10 minutes left, by the way. I'm going to be opening up the chat for everybody out there. Just wanted to see these. I'm going to cover BLI skills and Smile Direct. BLI Berkeley Lights. Yeah, I think still going to bounce. Still waiting for this. Although I do remember there was a short report on this one. But it's still looking fine for a bounce back to 29 to about 30. And skills, which I haven't covered in a long time, has been going down a lot. And, damn, if you would have done the opposite of what I thought was going to happen, you would have made a lot of money. So what happened here? When was this even? September? This wasn't September and I got it this wrong? Oh, wow. That is... that is messed up. Oh, I think it must have been the weekly chart, right? I was like, oh yeah, maybe cross on the weekly chart. 4 hours... Yeah, I don't really understand why I was so bullish on this. There's no trend, no nothing. So, that's a weird one. I think I messed up there. We got about 9 minutes left, by the way. 9 minutes left until the market is going to close. I want you to hit that like button. If we hit 200 likes, I'm going to make it really hard this time. Then we're going to be extending this live stream by another 15 minutes. I don't think we're going to hit 200 likes, but anyway, if you want another 15 minutes, we got to get to that 200 likes. Skills. I would argue that skills right now, I mean, it's in a tough position, eh? 4.5 billion market cap. I mean, they're growing, but I think that growth costs them a lot of money. And it's not like we're not growing 50% or 30%. Right? It's like they're just burning so much cash for that small amount of growth. I don't like that. And I think most people don't like it, and that's why the stock has been going down. But I think it's mostly priced into the stock, right? So it's mostly priced in, and I think the growth stocks are going to do fairly good. So they're gonna benefit greatly. So I'm gonna say that skills, I still believe it's gonna go up. I don't care what people say. I think we're gonna go up to $13, $14. But it's gonna take a while. I think it's gonna take about a month for us to get there. But yeah, I do think skills is going to be going back up to that, roughly around $13, $14 zone. We had one more stock from the members. I forgot its name. Smile Direct, right? So, wasn't that one a pump and dump, I think? Yeah, it was a pump and dump. There you go. Pumped up. What is happening outside? Look at that. Pump, dump, pump, dump, pump, dump, pump, dump. Consolidate. Dump again. Pump again. I mean, what's the next thing that's going to happen? Probably going to dump again. I mean, honestly. $2.4 billion market cap with annual revenues going down. That is not nice. That is not nice. Q1 has been 200 million, 174 million. Yeah, this is not really promising. I don't think anything is going to happen. Frankly, I think it's going to stay at the same level. Either that or Wall Street Bet's going to pump it up. Because I believe they had a lot of short interest, right? That could be the major reason why this stock has been going up. Yeah, no date on tapering. It's good news. What we saw today was good news for the markets. This would have been very horrible if Jerome Powell would have come out and said, hey, you know what? We're going to taper in November, so get ready. Like, that would have really destroyed the markets here. So I'm glad that that did not happen. But, yeah, Alibaba heading down. What the hell, man? You're freaking kidding me. It's about to fill the gap. We're about to just get back to 150 again. Is the correction over? I think the correction is over, as in we're probably not going to see it go down significantly more. I don't think this is going to happen at this point. Could it move very weak? Yeah, I think we could still see it go down. It's just, I don't think we're going to see a 15% correction, or like maybe, I don't think a 10% correction is happening either. So yeah, I think worst case is not going to happen. And it seems like the markets are going to consolidate, and then we're going to go higher. Because the money printer isn't going anywhere. Ivis says, please do an analysis on Lucid for the coming months. Yeah, the coming months. I mean, what do you want me to say? Like, I think it's going to be positive, yeah, for the coming months. It's just we need to know what's going to happen on the 27th. I think most likely what's going to happen is we're going to have like a bottom, which is around 22, and that's going to be the lowest point that we're going to see. And then we have an upper range, and that's the highest points that we're going to see. I do not believe that we're going to go above 30. I don't think that is going to happen. And if it happens, if it actually happens, it's just slightly above 30. It's difficult to say. If they deliver a lot of cars, then they could definitely spike big time. And with the Rivian IPO coming up as well, if Rivian does a good IPO, it could benefit Lucid as well. Because, you know, relatively speaking, it would be beneficial. Yeah, 2 more minutes until the market closes. 2 more minutes. We've got 2 minutes left. 2 more minutes. Like I said, if we hit 200 likes in the next 2 minutes, we're going to live stream another 15 minutes. If we hit 200 likes in the next 2 minutes, we're going to live stream an extra 15 minutes. Once again, if we hit 200 likes in the next 2 minutes, we're going to stream another 15 minutes. So I'm going to say we're going to probably be, you know, for the most part, trading in this range here, right? So the upper bounds, yeah, I would expect that to be the case. I don't think we're going to get much further beyond 30 for the next months. Oh, we have 1 more minute. We have 1 more minute until the market is going to close. We have 1 more minute. That is interesting. Nasdaq is pumping. No, wait, it's not pumping. It's going down. S&P is going down too. You see that? Russell's coming back down. Oh, damn. Oh, damn. We're actually going to... Are we going to hit 200 likes before the live stream ends? Don't do this to me. I'm already really tired today. I had to do some work. I had to lift like some really, really heavy bags. But I'm already used to that, you know, with C3.ai. And the market officially closed. Let's go. Yeah, that was it for today. That was it for the markets. We hit 198 likes. No, we hit 200 likes. So that means I'm going to have to do another 15 minutes. Okay, whatever. We're going to do an extra 15 minutes. We hit 200 likes. You convinced me. We're going to do another 15 minutes. Oh, man. I hate you guys. All right, so another 15 minutes. You know what? I'm going to take a break. See you later, guys. No, just joking. That would be like the... that would be such a douche move. Yeah, I'm just going to be right back. And then 15 minutes elapse. And that would be it. All right. Okay, what are we going to do? We got 15 minutes. Let's say if we hit 300 likes, we'll do like another 30 minutes. I don't think we're going to hit 300 likes, though. Don't make me. Okay, I will be giving you some thoughts, some things that I've been thinking about, some plays I'm thinking about, even with this, you know, price hike and so many stocks out there. So I guess we're going to do that in the coming minutes. And you could also let me know what you'd like me to do. You can just... we're not going to hit 300 likes. We've got 311 people. We're not going to hit 300 likes. I swear to God, if you pull that off, I'm going to sleep a lot later than what I expected. We got a 6.5 euro donation from Wouter. And Wouter says, cheers, go get a beer. It was a good day. Thank you, cheers. Appreciate it. That is awesome. All right, so what did we want to say? Haha. Okay, so these stocks are, in my opinion, going to go up the same way that Robinhood went up. Was one of the stocks that we pointed out was going to go up. Same with Uber. It was sitting at 38, then it jumped to 45, 46. Was one of the stocks that we said was going to go up. Same with Netlist. We said it was going to go up. It was sitting at 4.5. It's now sitting at 5.5. You know, even Virgin Galactic hit like 24 or 23, and now it's sitting at 25. Helion didn't go up much, but I think Helion's going to go up a lot. And what was another stock, right? Nano Dimension going up 8%. BNGO went up 5%. So the next stocks that I think are going to go up, UiPath. This stock is ready to go up. It's not financial advice. I'm not a financial advisor. I think the technicals on this stock are looking phenomenal, especially what I'm seeing here on the daily chart. It's been quite low on the RSI. MACD could be popping very soon. Weekly chart is just, you know, it's non-existent, of course, because this stock has not been on the markets for a very long time. But it has an all-time high of about $90. They have great fundamentals. ARK is buying boatload of UiPath almost every single day. We're getting a massive discount on a beautiful company. What they do is software robotics, and I think that is the future, and I think they've been growing phenomenally, although burning a lot of cash, which was one of the main reasons why the stock went down. Growth companies burn cash. This company's been growing fast. I think it's going to do well. I think we're going to see this bad boy get all the way back up to $70. in the next month or two, right? So that's my prediction on UiPath. I think Uber is going to keep going up, maybe consolidate, but still head upwards to the 50s. I think Robinhood is going to go up. We're going to see the 50s for Robinhood as well. So for the stocks that I was bullish on the past 2 weeks, I do think Robinhood might go up much more, although maybe correct first and then go up to the 50s. Netlist, telling you, Netlist could get back to like $10 by the end of this year. So I like Netlist a lot. There are a couple lawsuits going on where Netlist could be benefiting greatly. They could get billions of dollars in damages, and that their market cap is 1.2 billion. So if they get like billions of dollars, if they get like several billions of dollars, that would make this stock worth a lot more, obviously. So I think the stock's going to be worth a lot more. Okay, that's ridiculous, right? So the idea is I think it's going to get back to $10 by the end of this year. So this is another stock that I like a lot. SoFi, obviously, we've covered SoFi. I think SoFi is going to get back to $20. It's going to hit resistance, pull back, and we're going to shoot to $20 probably somewhere in November. And I'm doing these very fast because I'm covering a lot of stocks, but I've already thought about these stocks before, and I know in particular where they're going to be heading. Nano Dimension. I think Nano Dimension is going to go back to $7 and then $8 and then $9 by the end of this year. I think that's going to happen as well. And these are all names that I have my own money into as well. So it's not like I'm just saying random stuff. I have my money into these stocks. And I've been benefiting greatly from the recent runs that we've had. And this is purely on the basis of, hey, growth stocks will go up. And these are all growth stocks that will benefit from the rally that we're going to see, or that we're already seeing. I mean, let's be honest. We're already seeing a rally in growth stocks. Look at what happened with Robinhood. Look what happened to SoFi. Look what happened to Uber. These are growth names. I don't think Uber is a value stock yet. Well, even the Chinese stocks went up, right? And speaking of the Chinese stocks, I think Alibaba, even if it goes to 130, it's a buying opportunity. I don't care what anybody says. China this, China that, Evergrande. I don't care. What I care about is, how is the business going? This company is doing good. They're not doing bad. They're being punished by the Chinese government. That is true, but it's also priced into the stock. I mean, there is a good reason why it's down 52% from all-time highs. I think it's a buying opportunity at 150. It could get lower. Maybe it gets to 130. I will personally dollar cost average. I've got a bunch of options that I have on Alibaba with very high risk, with a stop loss. But I will keep buying this stock unless we get news that their business is deteriorating, not because of China, but because they're doing stuff wrong. And so far, they're not. They're doing pretty good. They've been growing very fast over the past years. Net income looking pretty good. Yeah. DIDI also, I would argue that DIDI is a buying opportunity at $7.97. I think it's going to be hitting the upper bound, which is around $9. And that's what we're going to see about 2-3 weeks from now, most likely. Facebook. So people talking about Facebook. Facebook was down 4%. Yeah, I was kind of bearish on this stock recently. And it's gone down quite a bit. I would say maybe Facebook is a interesting opportunity to start dollar cost averaging in. I have bought a small amount of Facebook, right? A couple $100 of Facebook. And I would say this could go much lower because of the negative sentiment that we have right now. Yeah, so it could get back to 330 if we're lucky, because it's going to get back to 300. But I would say 330 would be a good support for Facebook, and the next support line is going to be around $300. So that is going to be, for me at least, another time to dollar cost average, right around in these zone, right? So in these zones, so let's say it hits this level, maybe bounces, and then I don't think this is going to happen necessarily, but if it does happen, then, well, I'll take advantage of that situation. I think Facebook is a great company. I think it's going to do well in the future as well. Why did you sell Baba? I did not want to have shares in Baba. I wanted to have options in Baba, and that's why I sold Baba. because I wanted to go a little riskier. Mainly because I don't have that much risk in my portfolio right now. I have a lot of capital, and I think BABA is at the point where having options could benefit greatly. Mainly due to the fact that there's so much upside potential if this thing turns around. I mean, think about it. The last time we went this low, I'll put it into perspective. The last time that BABA went this low, this fast, think about it, right? We've had a 30% move to the upside, 50% move to the upside, 17%, right? 40% move to the upside, 24%. So if we see any kind of move to the upside and you've got options, that is a bunch of capital that you're going to get out of that. Yeah, so that's what I wanted to say about that. I think Tesla is going to move up higher, mainly due to the fact that we have Q3 deliveries, right? I've talked about this before. First week of October, we have Q3 deliveries. Right before that, Tesla tends to run up, and we have been running up, right? We have the downturn right here, but then it ran up like 5%, like it was nothing, almost filled the gap. My target was Tesla hitting 758.9. Didn't happen. It hit 751.7. But I still think it's going to move up higher. I think relative to other opportunities in the market, Tesla is maybe a little, it's not that great right now, at least. It's like, even if it goes up to that all-time high, it's like, oh yeah, it's up 20%. Meanwhile, DIDI could double if things go well. But there's more certainty in Tesla heading up than a DIDI, for example, heading up. I would have to argue that is kind of true. So it's a safer bet. Is there anything else that I wanted to say? I don't think so. I think that's all I wanted to say right now. And I don't think we're fully out of the woods yet. Like, with that, I mean, I don't think we're going to see this happen, which is what people are hoping for right now. Oh, just going to keep on going up. Don't necessarily think so. We could definitely see a double bottom and then head back up. Why am I saying that? Well, look at this. We're not able to fill the gap. We're already returning to the downside. Today, I mean, it was up a percentage point, at least the S&P. Dow Jones up a percentage point, and the Russell up 0.9% or 1.9%. If this was really a reversal to the upside, we would have seen a massive spike to the upside, right? Like 2-3% potentially. Yeah. So I'm hoping for that to happen maybe tomorrow. If that doesn't happen, then obviously we're heading down to this area. And we're, September tends to be a bearish month. And we've seen that happen, right? It's just like, month of September rolls around and stock market is down 5%. We hit the 200-day moving average on the 4 hours, and on the daily chart, we hit the 100-day moving average. Yeah, we need to get some proper upside. I am optimistic, though. I think this correction will not get much worse, but it's going to take some time. I think when we're out of September, let's say by October, we're definitely heading up. At least that's my thought right now. Although you have to always keep in mind, right? We broke the trend line. It broke the trend line right here. See that? It bounced off of it and then it just collapsed. So we've already broken the trend line. So far, so good. If anything, we're going to see some sideways consolidation in this range. And then maybe getting into like November, December, that's where you have that spike. So if we see a bit of a recovery, you see something like this, right? Hold up. Just to put it into perspective, what I mean is, let's say we just go back and forth like that, right? And then getting into November, December, holiday period, we see that spike to what people say is going to be that target range. It's around 4,700-ish. Man, I'm so tired. Holy moly. Oh, I'm drawing this so horribly. So wait, let's see. This is December. This is December. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4,700. 4 let's say we move sideways until then, right? So sideways, and then we gradually spike upwards. That's kind of the idea that I currently have. So not a whole lot of exciting stuff happening in this month and next month. Most likely. It's just considering the seasonality, right? So the November, December they both tend to be better than the September-October period. Although one could argue that the tapering announcement is going to dictate which month is going to be better than other months, because we didn't have any sort of announcement. We don't know what's going to happen next. So we'll have to see. Maybe next time, they announce that the taper is going to start in November or December. Well, that will dictate what those months are going to look like. Because when they taper, it's not so good for the markets. It takes some liquidity away. And we've already seen how the markets reacts to that, so it's going to be quite negative. But yeah, overall, I'm positive. I think we're going to get out of this fairly soon. Probably in a week from now, we're already like heading up, or maybe even fully recovered. Who knows? I think this level right here, 4,480, that's going to be a tough one to breach. I'll tell you that. Did you get the headphones from our friend Kevin? He had the same pair months ago. I have no idea which ones he has, but a good friend of mine actually recommended me to get the AirPods Max because I've got Apple products, so it's very compatible. Yeah, Kevin probably uses Apple products too, so that might be for 237 likes, you can live stream for another 6 minutes. yeah, right. No, I can't do that. I have to actually rest because my back is hurting from lifting a lot of stuff. I'm gonna be pretty much taking a lot of stuff with me to the office, and I'm still not done. So the idea is, what I'm gonna do is I'm temporarily gonna be sleeping at my parents' house, but I'm gonna be working at the office. I'm gonna get rid of this apartment because it's not good. Electricity sometimes falls out, and internet tends to be, you've noticed it, right? With the internet disconnecting and with all the noise in the background and everything. The office space is going to work out pretty great, I think. I think it's going to improve the quality of the channel. The only problem is, I would say, I still haven't found a place, no proper apartment or studio or anything. And that's because of the housing market being so incredibly crowded. I've been trying every single day to find a place, but with no luck. So it's kind of sad. But that's how it is. It's like we're feeling that inflation on a daily basis, and the housing market is just incredibly crowded at the moment. But we'll survive. I mean, the office is going to be great. I'm going to be at the office 24/7, day and night. Better you go to sleep. You look tired. I'm definitely tired. Q&A session. All right, you're trying everything to get me to stay. Gara's back is hurting from holding the bag on Baba. I'm not holding any bags, honestly. My options are doing fine. It's just they're not really moving as much as I hoped. Short term. Will you do an office tour vlog? I'm curious. Yeah, definitely. Yeah, it's fun. I think it's not really. It doesn't feel like an office, right? It's just a place where you work, obviously, but that is an office. But it's not super boring or anything like that. It's going to be quite exciting, and we're gonna have like all sorts of tools, like a massive TV screen with like this digital pencil you can use and draw stuff on a TV screen, projectors, and it's really cool. It's going to be great. And hopefully I'll have my own apartment in the meantime, but that's going to take some time as well. I've been I've been paying my rent with stocks. for like the past months now. It's just great. Oh my god. I don't know anybody that does this, but like I've sold like Tesla stock or like Palantir stock. I'm like, let me just pay some rent. I've been paying everything with stock money. And I've been saving up the cash of the stream to invest in this right here. All right. Is it your place alone or do you share it? Yeah, it's my place alone. Like, I've got my own place in a building where other people are, which I like best, to be honest. It's a little lonely to have your own little place and there's nobody. I would prefer to have some people that are close because you get very lonely if you're only your own, from my experience. I really have to cut my hair very soon. Do that. How do you verify source of income? They don't care. The thing is, you've got to understand. You've got to understand that like a lot of offices right now are not rented out because nobody wants an office. Everybody's working at home, and so they are desperate. They want people to rent an office, and it's very cheap as well. You could ask your landlord to join the Patreon and deduct your rent. Man. Yeah, I think, oh boy. I think the stock markets have been very great. I hope they're going to stay like this, but I'm afraid in the next 5 years, it's not going to be like this. We're going to see more downside. We're going to see more sluggish growth coming up. But it's been great. The past 5 years have been phenomenal. So I think the times of like being able to like just sell stock to pay whatever, it's gonna be in the past. I mean, like by 2023-ish. All right. Pay your landlord by in C3.ai stock. Why would I do that? The value of C3 is going to increase substantially. No, I'm kidding. Yeah, only if I would sell them at like $200 per share, right? Guys, gals, we're going to wrap up the current live stream. Thank you for watching. We've extended this live stream for about 50 minutes to talk further about stocks. If you like this channel, then subscribe. Hit that notification bell right now. Make sure you check out the social media. We've got Instagram, we've got Twitter, links down below. And the Patreon is down below as well if you'd like to support the channel. And we have a Discord community that you can be a part of where I reside. I'm almost always active in the Discord community. So check it out. Link is down below. Alrighty. Have a great day. Today was a great day. Hopefully tomorrow is going to be better. But we'll have to see if that's going to be the case. Thank you for watching. This was Lucid Trading. I'll see you tomorrow before the market opens and before the market closes. So see you tomorrow.